Hello, everyone. Good morning. We will be beginning the webinar shortly. Good morning, ladies and gentlemen, and welcome to today's webinar on the future of taxation, digital compliance, and e-invoicing in the UAE, hosted by Q&A Marcom and Events. As the UAE continues its remarkable journey towards becoming one of the world's leading digital economies, the tax landscape is evolving at an unprecedented pace. The move towards what many are calling Tax 2.0 is reshaping how organizations manage compliance, financial reporting, and business operations. Today's webinar brings together leading experts from government, finance, tax, technology, and digital transformation to discuss the opportunities, challenges, and practical steps organizations can take to prepare for this new era. Thank you all for joining us. Before we begin, I'd like to thank our sponsors for making this event possible. Smart Innovation Partner Billet, Innovation Sponsors Ecosio Axeli, Panel Sponsors UB, SW Tenet, Casio. Let's now begin with an opening keynote, and it's my pleasure to introduce our keynote speaker, Dr. Ahmad Alam, Senior Financial Expert at His Highness the Ruler's Court of Dubai. Dr. Alam brings significant, extensive expertise in shaping financial strategy, economic development, and digital transformation. And today he will share insights into how fintech innovation, tax modernization, and digital compliance are shaping the UAE's future growth agenda. Please join me in welcoming Dr. Ahmad Alam. Welcome, Dr. Alam.
Thank you very much, Anita. It's my pleasure for being here, and thank you for the invitation. I wish you hear me, guys.
Yeah, we can hear you. If you can speak up a little, I think it's...
Yes, my voice is okay right now?
Yeah, it's fine. It's fine.
Perfect. Okay. So thank you again. Thank you for everyone who joined us. It's my pleasure to be here with you guys for talking about one of the most important topic running at the moment related to the value-added tax and for the accounting system as well. So let me start with something that very simple. For many years, an invoice was just a document, a piece of paper, a PDF, an email attachment, a file saved somewhere in the finance department. But today, the UAE digital economy and the invoice is being something much more powerful. It's becoming data, it's becoming evidence, it's becoming a compliance tool. So, and very soon it will become a bridge between tax, fintech, payment, banking, and business intelligence. This is why the e-invoicing is not just a tax topic. It's a business transformation topic. And I believe the companies that understand this very early will not only comply better, but they will operate better as well. The UAE has always been a country that looks forward. It doesn't wait for the future to arrive. In fact, it built it. So as we saw what's going on with the fintech, we saw this in digital government. We saw this as well in the virtual assets regulation. We saw this in tax reform from value-added tax to the corporate tax. And now we are seeing it again with the e-invoicing. Value-added tax was introduced in the UAE in 2018, and since then, the tax system has matured significantly. But value-added tax depend on one very important document, which is the invoice. Okay. I wish the camera, let me check.
Audio on. Sir, if you can turn on your camera, I think your camera is not on.
Yes, you are correct.
If
Is
you
it
can,
okay now?
no, we still can't see it. Ah, yes, now we can see. Now we can.
Perfect. Okay. Sorry for that. Okay. In fact, as we said that
Again,
we,
sir,
oh,
I think there's a problem again with the camera. If you can just keep it on, there is some problem. If you can turn the video on, because we can't see it
yes,
now again.
I would like to make sure because unfortunately it's keep switching off. Maybe it's related to security issue.
Okay.
No, I have an issue with from the host, the
Oh,
issue from
okay.
your side.
We'll just check. So you can keep speaking. I'll just check with from this side.
Yeah, please. Otherwise, I can connect from my mobile instead of my laptop.
No, no, it's fine. We'll check it. If you just keep speaking, it's fine. We'll
Perfect.
check if it is from our side, then we'll get it sorted. Otherwise, I'll tell you.
Yes, I believe at the moment maybe it's from my side.
If you can just check. Because you came on for a few seconds, but then again,
Yes,
no, now no, we still can't see you.
just a second, please. I
Yeah.
can.
So can you check? It's probably your virtual
Hmm.
background, but okay, that's fine. We've kept the screen now. It's fine. You can
Okay, no problem.
no problem.
Okay, perfect. So anyway, sorry for this technical issues. Uh, we can proceed what we was talking about. So uh, let's say that the VAT was introduced in the UAE since 2018, and since then the tax system has matured, as we said, significantly. Uh, but the value-added tax depend on one very important document which we're talking about, which is the invoice. The invoice is the evidence of the transaction, but the traditional invoice, in fact, has a problem as we see nowadays. This problem, it can be that the invoice is incomplete. It can be manually entered. It can be wrongly classified. It can be delayed. And the invoice also one of the problems that it can be disputed between the buyer and seller. So, and sometimes it can create risk without anyone noticing until much later. The e-invoice system come to change that. An e-invoice is not simply a PDF. It's not a scanned document. It's not just an invoice sent by email. That it's only digital looking. True that the invoicing is different, or the e-invoicing is completely different. It's well structured, it is standardized, it's machine readable, and it can be validated and exchanged and reported and also reconciled and analyzed as well. In other words, we can say that the e-invoicing is not about looking digital, but in fact, it is about being digital. This is the key message I would like to deliver during these few minutes. What we see now that the UAE invoicing model is designed around four main corners framework. The supplier, this is the first corner. The supplier accredited service provider, the second corner. The third is the buyer's accredited service provider. Fourth, the buyer itself. And finally, the fifth corner is the Federal Tax Authority. This means that business will not simply send invoices in the traditional way. Invoice data will move through a trusted digital network supported by accredited provider with tax data reported to the Federal Tax Authority. But let us not look at this only as a compliance machine, or like it's like something related to how the machine works. Let us look at what is really create. It creates cleaner data. It can create a fewer manual errors, and also it creates a faster reconciliation, better audit trails, more reliable value-added tax, and also it can create a strong trust between the business, regulator, and also the financial institutions. This is where e-invoicing become very interesting for the fintech or financial technology. Because financial technology needs a reliable data. The bank needs a reliable data. The payment platforms also need a reliable data. Supply chain and finance organization need a reliable data. Risk scoring entities also need a reliable data. E-invoicing provide all of this reliable data for all of these entities and all of this organization. And one of the richest source of commercial data is the invoice. When invoice data becomes well-structured and trusted, it can support faster payment, better credit decisions, and also it can support automated reconciliation, and finally, a smarter financing solutions. Payments, we all of us know that the payment tell us that the money have moved from one side to the other. But an e-invoice tell us why the money is moved or have been moved. Who sold these goods or services? Who bought it? What was supplied? What the amount is due? What was paid? And also what remains outstanding. All of this data is included in the e-invoice, which considered something so powerful. Now, some people may ask, is this only about the tax authority having more visibility? Is it something only related to the tax authority? My answer is very clear that this is not the only beneficiary from these e-invoices. Yes, e-invoicing improved the tax compliance. Yes, e-invoicing is supporting better value-added tax control. Yes, it helps reduce error and detect risk earlier, but also the e-invoicing help business in from different perspective and different dimensions, such as it helps the finance teams to spend less time retyping data. It helps reduce the invoice dispute. It helps improve the cash flow visibility, and a lot of other things could be supported to the business by the e-invoicing. The real opportunity is not only the compliance, the real opportunity is intelligence. That's why business must be well prepared and should be prepared early as well. The e-invoicing readiness is not achieved by buying software at the last minute. It starts with master data, such as the customer name, supplier details, TRN or tax register numbers, tax code, product classification, ERP system integration between the entity and the accredited service provider, and all of these preparation dimensions. So if the data going into the system is weak, the automation will not solve the problem. As we know that trash in is trash out. If the data is weak, it means that it will only make the weakness more faster. That's it. That's why we have to provide the system with very strong data. So my advice to business is very simple. Do not treat e-invoicing as an IT project. It's not only an IT project, it's not only a tax project, it's not only a finance project, it's a business transformation project. The tax, the finance, the IT, procurement, sales, management, all of them should be involved. And of course, with digital transformation comes an important question to the mind. Is it only just data transferred from one side to other side without considering the data security? This is very important question, as the data security is come to the highest priority for transferring data, especially from one side to the other side. Better compliance should never mean careless of data handling. The future requires secure transmission for the data encryption, strong access control, and the clear governance for the whole process. Based on all of that, ladies and gentlemen, the UE is not simply introducing a new invoicing requirement. It is building part of the digital infrastructure of the next economy. A future where tax is more automated, finance is more connected, payment are more intelligent, the audit as well are more data driven. In the old world, the question was, can my customer read this invoice? This what we was concerning about in the previous situation. But in the new world, after the e-invoicing, the question going to shift to be, can the system trust this invoice? So this is exactly the real shift after implementing the e-invoicing. And let me end with this thought. The companies that will win after implementing the e-invoice will not be the companies that only ask
Thank you, Dr. Alam. That was a very insightful session. Um, we will now move to our panel discussion titled The Future of Finance from Compliance to Automation and E-Invoicing. Audience, during the discussion, please type any questions you may have for any of the panelists, and we'll take up a few selected questions after this session. So, as regulatory requirements become increasingly digital and data-driven, organizations are being challenged to rethink traditional finance and tax processes. Automation, AI, digital invoicing, and integrated compliance platforms are no longer optional. In fact, they are becoming business imperatives. I'm delighted to welcome our distinguished panelists, Mohammad Sobi, Head of Internal Audit, Fujairah Government, Yulia Shelokina, Head of Tax and Accounting Compliance, SW Tenet, Snehal Kulte, Advisor, Chairman of his Digital Strategy and Transformation, Department of Municipalities and Transport, Arun Agarwal, Finance and Tax Policies Expert, Dubai Department of Finance, and Aman Ahmed, Senior Researcher and Strategist at Casio. Snehal will join us a couple of minutes late because he's caught up in a meeting, so he'll join us. But let's begin the discussion. So, Arun, can you hear me? Hello, Arun.
Hi. Yes.
Yeah, hi, Arun. Can you hear me?
Yeah, Anita, I
So
can hear
I
you.
think my video is turned off. Um, but if you can turn on your video, that would be great.
Yeah, sure.
Yeah, okay.
Yes.
So let's begin with you.
Yeah,
Uh,
sure.
Now, we know that governments are moving towards real-time, structured, and connected transaction ecosystems. So, how do you think enterprises can align better with this larger vision instead of preparing only for minimum compliance?
Yes, Anita. So, see, whenever any changes in any law came, always business think about what is minimum compliance. So,
Right.
I believe there is a difference between the compliance and readiness. So, minimum compliance is like rear view mirror strategy in forward moving environment.
Mm,
So, those businesses who are like consider this as an opportunity to strengthen their internal policies or change
mhm.
their operating model with upcoming changes required will lead in the market. So
Right.
I think business need to align with the government's long-term vision, as
Mm,
enterprise should first uh, establish internally like how they will going to implement this in their organization.
right.
So I am seeing and any other panel discussion also in business organization, all departments are trying to shift this responsibility on each other. Like it is tax department responsibility or IT department responsibility or
Mm,
finance department. But I believe this invoicing is not a responsibility of one department. All department, let it be tax, finance, IT, sales, legal, compliance, all need to work together to establish a unified government framework, to successful of this project. Secondly, business should also prioritize their data quality and process standardization. Like,
mm.
because as doctor said before in the panel
Keynote.
this, discussion, he said keynote that it's like data driven economy now. So if
Mm,
business will not connect digitally the ecosystem, the quality of their underlying transaction data will not be accurate, right? So it
mm,
will become very difficult for them to uh, like generate invoice or determine the logic for each transaction, approval workflow, ERP integration, all this need to connect internally.
right.
And thirdly, I will say like the enterprise should also invest in technology that
Mm,
deliver both compliance and business intelligence, because
right.
this data will helpful in a business for business in many different ways they can use. Like working capital management or generative predictive insight, automate control, monitor risk for many other purposes. So if business will not be ready, today for this compliance,
Mm.
considering the long-term vision, then they will be stay behind in the race in the market. So That is what
Absolutely.
from my side. Yeah.
I think you've hit on two very important points. One is the importance of collaboration and alignment between the vision or where the country is headed, and also with the company's business goals. And secondly is the importance of data management, which companies very often overlook because they think that their existing data is good and they just go after the implementation or the integration of the technology. But where they fail is the data management aspect of it. So I think you've like put together very a very two very important points on this actually. Now, just to add to that, Arun, so now we know that mandates are becoming digital, data led, and real time. Now, how do you see AI transforming the way that enterprises actually understand, implement, and continuously comply with these requirements? Because AI is everywhere now, but how effective is it in helping organizations comply with and also helping organizations actually better their infrastructure? Arun, you've muted, I think. I think you're muted. Can you?
Yeah, sorry.
Yeah, okay.
So
No.
I think AI will be one of the biggest enabler of next generation for
Mm,
tax and compliance, regulatory compliance.
mm,
Previously, like it's a compliance means it's a periodic exercise, at the end of the year or end of the
mm,
month,
mm.
right? But
Right.
now after e-invoicing, it will become a real time.
Mm,
So we need to with e-invoicing, other digital reporting regimes, and all this will be continuous and real time data driven system. So
right.
in this environment, I think AI will play a very important role in transformation of three key area, I believe. First
Mm,
is regulatory intelligence. So,
mm,
currently, organizations are struggling
mm,
to keep their pace with constantly evolving techs, especially when
mm,
the big organizations uh, who have big jurisdiction, like they are registered in different countries. So
right.
they have to comply with all different countries, and then it's a multiple jurisdiction, and they all jurisdiction have their own requirement to
Mm,
compliance for compliance.
right.
So I think
Right.
if AI will help us, to AI will help to monitor regulatory changes,
Mm,
interpret regulation, and that can also help to identify business impact. So
right.
business can able to know like what is uh, compliance they required for each the region, and this will allow business to move from the reactive compliance to a
Mm,
proactive compliance.
right.
Secondly, like automated compliance monitoring. So AI
Mm,
can also help in continuously analyze the transaction before invoice actually issued to the customer, right? So they can identify the potential error, weight, inconsistency, missing data field, incorrect text treatment, duplicate invoice, or unusual pattern, right? So
mm,
rather than issuing wrong invoice and then rectifying through credit note, if
right.
business will use AI, it will help to
Mm,
rectify it on time. And
mm,
thirdly, it's a predictive risk management and analysis tool. We can see that way. So, like government now will have real-time data. So
mm,
the audit will be very sophisticated. They know, like what exactly the error is and which
right.
where
Right.
to focus. So business should also be want business should also need to upgrade themselves, and they need to change
Mm,
their approach. So they need to like uh, use AI in the same way that so they will also know like what is the weakness,
mm,
where it's a exposure in non-compliance, or highlight a area where it require management attendance
mm, mm,
before audit or authority will come for this question. So
right.
the future is like not compliance on periodic reporting. It's
Mm.
continuous compliance with AI intelligence, I believe.
Absolutely. I think you've again summed it up very well because AI helps to address a lot of the predictive gaps that are there and thereby improving compliance and helping organizations to make better decisions. Uh,
Correct.
so Aman, now you have a data analysis and data background basically, huh? So now we were talking, you saw how Arun was talking about how data helps to make more data management or effective data management helps to make more informed decisions. So how do you think real-time financial data and analytics actually enable CFOs to make faster and more strategic decisions?
Yeah, absolutely. I think this will be the next sort of big
Mm,
trend that we start seeing
mm,
across. AI is big, but I think one of the results that come of AI is being able to have access to your own data much faster. If we look at the trend now, I think most companies do either monthly or
mm,
quarterly reconciliations because that's often when they'll get the data. That's how long it takes. An example is like one of the construction clients that I'd worked with. These
mm.
guys were spending across multiple different channels, so they were using
Right,
cash, using maybe a
right.
shared card,
Mm,
and employees would also get reimbursed.
right,
That process alone creates delays, but also
right.
getting the data, getting the card statement after 1 month, getting those ledgers whenever they receive them and whenever the employees submit the receipts. All of that creates a massive delay, which slows down visibility into your own books. In their case specifically, I mean, they were losing millions of dirhams, not just to cash leakages and cash misuse, but also the amount of time that they were wasting, and the amount of times that they would go over budget because they just didn't have that data. Um, Again, often in instances like this, and specifically with that company, finance department, instead of being a strategic decider and a sort of growth enabler, became a little bit of a bottleneck because they were viewed as someone that, okay, I need to get back to them, and I need to hear, sorry, not here. I'm still waiting on them to approve my expenses. I'm still waiting on them for that instance. So that's essentially the trend. What they did, and what I think a lot of companies will start doing in the UAE, is they started to digitize their expenses and centralize them so that they were able to essentially spend from one place. With that, they were able to get instant visibility. So now, I know how much we've spent on a daily, weekly, heck, even hourly basis, depending on the size of the company. Their reconciliation is faster, and when your reconciliation is faster, you can make sure that your books are audit proof faster and file your taxes faster, and frankly make decisions faster. um,
Mm,
I think the best analogy for this would be, imagine you're flying a plane, right?
mm,
When a plane takes off and lands, in that process, it is checking its course and checking its position hundreds of times per minute. Now, if you had a 12-hour flight and I told you you can only check, your position once every hour, you
mm.
will waste so much fuel in not just going off course, that obviously wastes fuel, but
Right.
coming back on course, that also takes a lot of resources and fuel.
Mm,
And that's unfortunately what's happening to a lot of businesses without real-time data, right? You only have 12 months in a year when you're able to close your books and see how much has been spent.
right.
And they're not able to make decisions faster and see these challenges as they come up, before they come up. So I think that's the sort of the trend that I'm seeing.
Yeah, I think that's very pertinent. Now that brings me to the question of spend management. So you spoke of cost cutting. Now, how do you think businesses can move beyond cost cutting and use spend management as a tool for greater financial intelligence and value creation?
Yeah, that's a great question. I think cost cutting is kind of a trap when people think of spend management. In my opinion, and based on what I've seen, cost cutting should be the last step because that signals that something went wrong somewhere. Either you were overspending or your financials weren't prepared to handle the challenges that are either economic or in the business environment. The key, in my opinion, and again experience, is to control the costs so you don't have to cut them later on. It's
Right.
to enforce the rules in your company that often already exist. There's
Mm,
already these rules in place that people simply aren't compliant with, right? It's to make sure that whenever you're closing your books, you're able to close them on budget and on time, and it's able to ensure that you have a healthy spend culture and that your employees know exactly how much you can spend. I think Arun
mm,
spoke about this briefly, where finance shouldn't just be finance's responsibility; it is a
right.
collective company business responsibility because we're all part of that unit,
Right.
right? And
Right.
so, an example that I can give you is one of my clients that I'd worked with. They had a large sales team. They were a software company. They would travel quite a
Mm,
bit.
mm,
They had per diem allowances that were about $50 now, for food mainly. Now, what would end up happening is when they would file their expenses for reimbursement, often if the bill was 52, 51.5, fifty
mm,
point five, that would be approved.
right.
Because it's a human factor, right? It's a small thing, whatever, let it slide. The issue with that is over a large enough time frame and with a large enough team, that adds up. That is a cost that was unaccounted for that has now come up, right?
Right.
And then the other aspect is obviously a minor thing with spend management, but aside from the control, it's the admin that gets taken care of. When they're submitting receipts, are you sitting down as the finance person manually entering all the info, or is it automatically, is the TRN number, is the amount, is the conversion, is all of that automatically extracted when they submit it with an app, for example? So that's one of the things. And then the other aspect as well is, along with better data and all of the benefits, you are able to control the spending in real time, which makes finance the enabler of growth as opposed to the bottleneck that, oh my God, they didn't approve my purchase again. And so that frees up time for strategic value creation. And I know I've been talking quite a bit, but the other aspect as well that often goes unnoticed is a lot of spend management platforms like Cashew as well have a rewards program built in. So now, as a business, if I'm spending, let's say, 1 million dirhams a year, I'm not getting anything. But when I use a spend management tool like Cashew, I am getting either cashback or air miles that I can then use for employee travel. So now I have created value instead of cutting it from essentially a cost that already exists, right? So instead of having to cut costs and being like, well, we need to figure out how we can optimize, you plan ahead, you are able to control spending, make sure that everything is compliant and your books are being closed on time. And now you are creating value in other aspects of the business that can be used. So that is kind of the trend that I see. And this is probably what the future will look like for a lot of businesses.
Right. Interesting. There's a very interesting perspective on spend management. Snehal, I think you've joined us. Snehal, can you hear me? Okay, Snehal is still joining in. Okay. Now, Yulia, are you there?
Yes, I'm here.
Yeah, Yulia, now we've talked about AI, we've talked about, collaboration and data management. Now let's come to the more practical aspect of, e-invoicing, and tell us, I mean, UAE is in this e-invoicing rollout mode. So what are some of the potential penalties and fines for non-compliance?
Yeah, thank you, Anita. Hello, everyone. So can you hear me well?
Yes, very well.
Okay, perfect. Yeah, so my name is Yulia Shalukhina. I'm a head of tax and accounting compliance in SW Tenet. So when organizations hear the word compliance, they often immediately think about fines and penalties. But however, penalties are only one part of much broader risk landscape. So the first level of risk is, of course, financial, and companies may face penalties for late registrations, incorrect filings, incomplete documentation, insufficient record keeping. With e-invoicing, business will also face new compliance obligations related to the issuance and transmission of invoices. Under the new invoicing legislation, invoices are expected to be transmitted through the invoicing system within the prescribed timeline, 14 days after the transaction. Administrative penalties may apply for non-compliance. With current guidance issued by FTA, they indicate penalties from 100 dirham per invoice up to 5,000 dirham per invoice, depending on the nature and frequency of the violation. The business is processing hundreds or thousands of invoices each month, so this creates a huge risk for such businesses. The second level of risk is operational, and non-compliance can trigger, for example, tax audits or increased information requests, delays in VAT refunds, and other additional attention from tax authorities. The third level is reputational, and now investors, banks, government entities increasingly assess compliance maturity before entering into business relationship. And compliance become a business's credibility issue, not simply a regulatory requirement. However, I believe that invoicing is part of a global trend for greater transparency and digital tax administration. Compliance will no longer be assessed only through periodic tax returns or issuing tax invoices through invoicing system. FTL will have access to significantly more transaction level information and greater visibility over business activities. This means organizations should focus on overall compliance readiness. Yeah, thank you.
Absolutely. Now, see, we've talked about compliance, we've talked about implementation, AI, data. Now, my broader question to you is, how can companies actually prepare for this huge transition?
Yes, as previously Dr. Ahmed Talam said, the most important message for business is that invoicing should not be treated as a technology project only. Many organizations immediately start discussing preparation to invoice in the lines of software solutions, ERP integrations. While technology is important, successful implementation actually starts much earlier. So we usually recommend that companies focus on following key areas. So the first, understand the regulatory requirements. So and assess how the future framework will impact existing business process.
Right.
Second, review current invoicing and finance process in the company. Many organizations still rely on manual approvals, spreadsheets, decentralized workflows, inconsistent invoicing practice. So it is very important. The third, assessment of data quality. Invoicing depends on accurate and structured data. If, for example, customer records, supplier information, VAT classifications inconsistent today, automation will simply make those errors more visible for tax authorities. The fourth, evaluate technology readiness, of course, and integration capabilities. It's also important during the process of, for example, now the company should choose their service provider for invoicing, and during this process, the company also should assess how the company is ready for this process and which service provider will suit them more. For business with turnover above 50 million dirhams, companies should choose their service provider by the end of October and start invoicing from January. I mean, start using the invoicing system. So this is very important, and we have short deadline. And the last very important, what I believe often overlooked, is tax methodology. One of the major consequences of increased transparency is that tax authorities will gain visibility over a much broader range of transactions. Historically, tax authorities primarily reviewed information only reflected in VAT returns. With invoicing, FTA will have access to significantly more transactions than previously. For example, out-of-scope transactions for VAT purposes. Previously, they were out of VAT returns, but now companies should also issue e-invoices for out-of-scope transactions or intercompany arrangements, cross-border transactions, reimbursement, and other complex operations where correct VAT treatment is very important. Authorities plan to use AI for analyzing of this huge volume of transactions for further target audit. As a result, companies should not simply ask, can our system generate electronic invoice? The companies should ask themselves, am I confident that our VAT treatment is correct? In practice, we often see businesses that have developed VAT positions over time based on historical assumptions or operational practice, and now invoicing creates opportunity to revise those positions and validate whether they remain appropriate. This is why we recommend conducting VAT methodology review, compliance readiness assessment before implementation. And we support clients throughout this process, help companies with the invoicing readiness, review VAT methodology, compliance framework, support throughout accounting, VAT returns, and so on. So we propose not to just to automate existing process, but to automate compliant process. Thank you.
Yeah, I think the transition is huge. It's not as easy as it looks, or it's not as simple as it feels. But like you said, there's a whole lot of things to take into account. And I think that's what our panelists have been saying also. Now, Mr. Sobi, are you there? Can you hear me?
Yes, I hear you.
Yeah, so let me ask you the question of balance. Now, how do you think companies can balance increased automation with the need for governance, security, compliance, and human oversight?
It's a challenge.
Absolutely.
Technology now moves fast while governance moves slow.
Right.
We from public sector side, when we now start to build or use AI in our projects, we start to focus in automating the task, but still keep the judgment with my human, with my individual, with my senior people.
Right.
Still, we have to balance here, automate the repetitive tasks, okay, but keep an eye at that. Also, we try when this is something, as we said, technology is moving fast. We already are using systems which was not dealing with AI before. So now to enhance and implement the AI modules or whatever e-invoicing or any technology is coming, we need to build the governance into the system, not around it. We need
Right.
to take it with us. Another point that we start to take care now, even before we sign any contracts, to merge, check our vendor due diligence. While we are setting the project, we access minimization. There is a lot of points companies have to take care to balance between keep your task or your transaction automated, but still put your eye, make sure you have a security compliance to the law, system. Suddenly you will find one million expense happen. It will be verified as a abnormal transaction. System doesn't know that this payment was urgently. If we are speaking about private sector, it's a special order by port. So AI will keep it, or a system will think it's error, human error, while it's need some information from human or knowledge. So we need little balance, little interfere. Sorry.
Absolutely. I agree with you there. Now, that brings me to a very pertinent question. What skills and capabilities do you think will define the finance leaders and teams of the future, since we're talking about a huge ecosystem here?
Again, this is not a big move. It will happen next 10 years. Think about it. If we, from 10 years before or 20 years, most of our focus in finance department as a data entry, most of our time we waste in here. Within the last 5 years, okay, we do some reconciliation, we do data entry. Now all this, to be true, will be done automatically. So we need to focus now. What is my ability to connect those numbers to my strategy to help the management, not to waste my time to stuck with a bank statement reconciliation, make sure the invoice was issued to the right customer. A lot of change. Still, we need to have a data literacy. We don't need, as a professionals, we don't need to code. Even programmers now will not use code, but we need to think. We need to gain knowledge about how to get the results. Okay, how is it reliable? Okay, we need communication skills, storytelling skills. Now we'll have AI cannot, if you ask AI to explain in a meeting to the board of directors financial information, It still doesn't have the skills to speak to non-finance CEO and give him what is happening between the numbers. So still you need some skills. Technology or AI will not give you now. You need to be ready for it. You need to have a continuous learning. You need to keep learning, keep in the same what we trend.
Yes.
Okay. Yeah. Try to not to stop learning.
Correct. I think
Make it
that's
simple.
important.
As to still in the next 10 years to still in as a position of senior financial advisor, tax advisor, you need to know about all these tools. Otherwise, you will be behind.
Absolutely. I think you've touched upon an important point of continuous learning and keeping up to date with the trends in the market, because the financial landscape is constantly evolving. The tax landscape is complex. So financial literacy plus constant updation is paramount, I think, over here. I think you've touched on a very important point.
Thank you.
The good thing about this discussion is we've touched upon a lot of very important points, how companies can prepare themselves for the transition, what they should actually do with the AI tools that they have at hand, what kind of skills they should have. As kind of rounding out this discussion, I would like to take some of the audience questions that are here. This is, they've not addressed it to any particular panelist as such, but whoever is comfortable with these questions, we can go ahead with this. The first question is from an attendee, Batlong Makone. The question is, with the introduction of e-invoicing, how are we going to bridge the gap of transactions with non-compliant clients or service providers? Isn't their non-compliance going to contaminate my data? Who would like to? Aman, do you want to take this up?
Yeah,
can take a shot.
I could answer. Yeah.
Okay, Yulia, and then
Yeah, sure. Of course, if your client is non-compliant with the invoicing, or your customer, or is non-compliant, it doesn't mean that you will receive any fines in this case, because the obligation on issuing invoicing is on a company which should issue invoice, not receive. So it means that the company should be in line with the deadlines for issuing invoicing for its clients and customers through the system. And if on other side customer did not, sign the agreement and did not use the invoicing system properly, it doesn't mean that it is your fault. It means that this customer will not receive it in time. For business purpose, you could, for example, duplicate it through email, for example. Send invoice to your customer through email if you have any technical problems. But for tax purpose, for compliance purpose, you anyway should send invoice through the invoicing system.
Absolutely. Aman, do you want to add to that?
I think she addressed it pretty well. But yeah, I was going to say, assuming that you are billing your clients and you are the one issuing the invoice through the system, it's unlikely that they would be non-compliant in filling that out and in filling that information. And Julia, you can correct me if I'm wrong. You're the tax expert here. So yeah, that would be my answer as well, just to build upon what she said.
Absolutely. Now we have a very interesting question here from the person who has asked the question is Ekaterina Korneva. Now the question is, if my company is going to be liquidated in 2026, do we need to register the company for invoicing in 2027? I think that's a very very interesting question, and something that not too many, our conversation earlier has not addressed. So Who wants to take that up?
Yes, it's an interesting question, but it depends on what the turnover your company had in 2025 first, because the obligation to register for invoicing depends on turnover of the company for the previous year. Anyway, if your company will not operate in 2027, probably you don't need to register for 2027 year, because companies with a turnover less than 50 millions, they need to register only in the first quarter of 2027. So they could do nothing in 26.
All right. Now, the next question, Arun, if possible, I would like you to take this up. I mean, we spoke
Yeah,
about
sure.
this still. The question is, so the question is from Ramsha Dalvi. The question is, how is the role of compliance evolving with increasing automation in finance systems?
Correct. It's a very interesting question, and many people will have this question nowadays because as the automation is increasing. Yesterday I was there in one of this AI seminar, so we are discussing with a couple of other experts the same questions. Like, see, people considering that the increasing of AI will replace the current skilled people, but
Right.
somehow it's yes, but there will be new role will come, and people need to upgrade themselves as things or admin things will become more easy. So as I said in my other question, like, let's say invoicing. Now currently we are preparing a manual invoice, so datas are not in structured format, datas are not in reportable way, easy to generate a report. But now after invoicing, the data will be in structured format, the chances of errors will be less.
Right.
So it will be very easy to comply the things, and some of this issue will be automatically highlighted by system itself. So in this environment, we need to upgrade ourselves, and we need to think from the business perspective that, like, how now we can use this data for more betterment for business, like to effectively managing the cash flow, for prepare ourselves for audit in advance, to address the weakness we have in our system or in our data or in a process, right? Connect other departments like tax with finance, with IT, with procurement, because we have now data. So there are gaps in these departments that can be visible, and this can be fixed now. So AI, this change in automation will really help business if business will take it in positive way and really try to use this automation. It will make the routine work very smooth, and then the focus should be shift for enhancement and betterment of business.
Absolutely. I think we've addressed a whole lot of touch points here. There are several more interesting questions, which I think the audience, they should interact one-on-one with the panelists later on and, get their queries resolved. Now I would like to move to the next segment. So thank you, panelists, for this wonderful discussion that we've had. And it was very insightful. All of you brought up very valid points, that companies should keep in mind for a successful e-invoicing and tax transformation. It is clear that the future of finance will be defined by automation, digital compliance, and data-driven decision-making. Thank you all once again. Let's now come to a very interesting portion of the webinar, which is the fireside chat. Now, our fireside chat now is on the topic of mandate to opportunity, understanding e-invoicing and its business impact. Louise, can you hear me? Are you here?
Yeah, I can.
Right. So my guest today is Louise Ronda, product owner.
I tried to switch on my video, but I'm not able to. So.
It goes here. Louise, can you turn?
No, I'm trying, but I'm not.
Okay. All right, no worries. So now Luis has over 13 years of experience in the e-invoicing landscape, covering countries around South America, Europe, and APAC. He has 30 years of experience in the IT branch and is an expert in electronic signatures for e-invoicing and other applications. Welcome, Luis. Audience, again, please feel free to type in any questions you may have for Luis, and we'll take it up after the discussion. Now, Luis, tell us, what are the main differences between implementing e-invoicing in the UAE and in other countries?
Well, I would say implementing invoicing basically in all the countries, I would say, is a question of data. Okay, mainly is prepare your data. That's the main thing you have to do. But of course, there are important differences between UAE and other countries. For example, in other countries, you are reporting almost everything. In the UAE, they wanted to start just with B2B transaction. That was an important difference. In other countries, for example, they don't rely on accredited service providers. You can connect directly to the tax authority, and in the UAE, they do not. And in other countries, depending on which country in Europe or in South America especially, you get somehow like an ID of the invoice from the tax authority, and then you are the one who has to send the invoice. So, and the model in the UAE is just you rely on the accredited service provider to send the invoice and to report to the tax authorities all together. For the accredited service provider, you have to do both things. You have to take care of this, but from the user perspective, from the companies that have to be compliant, it is just rely on an accredited service provider. That I would say that's a main difference. And the other one is they want to start slow. I mean, they don't want to start using B2C transactions and so on. They just start with B2B.
Absolutely. So now, how would you handle the e-invoicing in the export process? That being the case.
Yeah. For export, of course, in the export process, you can have customers that are able to receive PayPal invoices. You can have them in the whole world because PayPal is becoming the main standard. Even the PayPal that is going to be used, PayPal Pint, is going to be, or is trying to be, a standard for the whole world, PayPal International. But since you have to report that data, you have to send that information to your accredited service provider, and the accredited service provider, in agreement with you as a customer, will have to decide either to send it via email or send it via PayPal, in the case the receiver is able to receive it. But mainly, you have to rely on the accredited service provider and then send it to the receiver, either via email or any other means that your accredited service provider is able to.
Absolutely. Now, reporting VAT, do you think we still need to report it the same way we're doing it now?
Yeah, the idea in one of the discussions we have with the tax authorities in the UAE, at this moment, their decision is you have to keep on reporting the same way, but you will have somehow like pre-filled forms to be able to do it faster and in a better way. So that's for the moment their approach from the tax authorities, that you will be able to have pre-filled information to send it, but you will have to report.
Right. So that brings me to my next question. What practical steps should businesses take today to prepare for the UAE's invoicing rollout? And what are the most common implementation challenges that you anticipate?
Yeah, that's always the same. Of course, you have to choose a partner to do it. Okay. Once you choose a partner, you have to get mainly analyze the data. I mean, your partner needs to give you the information that you need to fulfill. And then at this point, you will have to see if you have all that data, if the conditional data, and especially the mandatory data you have to report. So that is the main thing. Check the data, making use of your partner. But of course, first of all, you need to select your partner and check the data. That's common for all the countries. Check if you have all the data necessary to be reported.
Right. Now, how will e-invoicing impact transactions between businesses, tax authorities, and trading partners, particularly for companies operating across multiple jurisdictions?
Well, for companies that are in several jurisdictions and they have to manage that invoicing processes, all those invoicing process. For example, what we offer, and I think the market offers in general, is that you take care if you have just one source of information for multiple jurisdictions. You can have, at least you have it from us, from Ecosia, but you can have it for our competitors or for some of our competitors. To have an standardized data for all the countries. So you are able to export your data in a standardized format and in a way that you can send it to us. And then we take care of sending to that jurisdiction. So main thing, or one approach, and that's the approach most of big companies that have multiple jurisdictions, get a partner, and that partner takes care. You just generate a format and you just connect to that partner, and then that partner is taking care of sending the compliant invoice anywhere.
Right. Now, my next question is something that most businesses are asking today. So beyond regulatory compliance, what business benefits can organizations expect from e-invoicing in terms of efficiency, cash flow management, and digital transformation?
Yeah. Well, for example, we were talking about what we discussed first for the pre-filled VAT return. Of course, you have online and directly. I mean, you don't need to wait till the end of the reporting period to know your status. That's an important to get to know how is your finance, and not only your finance, how is your VAT related to the tax authority. Well, and then related to automation, I would say that for the outbound process is not a big thing. I would say most of the companies, at least the companies we work with, normally they already had automated processes. But for the inbound process, you can improve significantly the process by controlling all the data that is coming in, controlling the approval process, depending on that data, and then releasing the payments. I would say that AR is the main benefit. And in the near future, because we're seeing everywhere in the world, you will probably you won't need any reporting of data. You will have everything online. So that's, for example, in Italy, that is quite advanced. They have everything online. They are stopping some reportings that they were doing monthly and so on. So you have wins mainly from the AR perspective, accounts receivable, and from the tax reporting perspective.
Yeah, I think, Luis, you've given us insights into some very valuable touch points. For example, the interactions between businesses and tax authorities, which you summed up very well, and also the benefits of e-invoicing, how it can benefit efficiency, cash flow management, and digital transformation. That was a very insightful conversation, Luis, from Ecosia. Thank you so much, Luis. Thank you very much.
Thank you. Thank you very much.
Thank you, Luis. we now come to our next fireside chat, which again deals with a very important aspect, which is SME lending through supply chain finance. Mr. Shivakumar, are you here? Can you hear me?
I can hear you.
Right. So our next guest is Mr. Shivakumar Raja Kannu, Chief Business Officer from UB MENA. And he's going to talk to us about how access to working capital is one of the biggest challenges facing SMEs, and how digital finance platforms and supply chain finance solutions are helping businesses unlock liquidity, improve cash flow, and accelerate growth. So tell us, Mr. Shivakumar, tell us how supply chain finance unlocks working capital for SMEs.
Okay. Thanks for having me here today. Just to set the context, now supply chain finance as a financing model, this is one of the beneficial areas which the whole e-invoicing system will come up with, right? Now today, historically, if you see the SME lending in UAE and across MENA, the total SME lending penetration is hardly is about less than 10% across all banks, across all markets, right? It's been a persistent problem all through, and banks want to lend, SMEs want to borrow. However, there have been challenges in terms of getting verifiable data, validated data, and the manual processes involved, which has not allowed the banks to lend at a large scale to SMEs. So that's been a persistent problem, and that's something which it's about to change with the whole e-invoicing system coming up.
Right. Now, set the stage for us. How important are SMEs for the UAE economy, and what's the problem that we are here to talk about?
So if you talk about numbers, right? So historically, around more than 95% of all companies you typically put under the definition of SMEs. Again, the SME definition is both based on the turnover and the number of employees.
Right.
Plus, even in terms of the contribution to the GDP or number of employees the private sector workforce has, quite a large portion is with SMEs, and that's why it's so critical for the whole economy.
Right. And so that being the case, why do you think it is so hard for a healthy, growing SME to get financed?
Yeah, so historically, if you see, banks have been struggling to lend to SMEs, though they want to lend to SMEs because of the manual processes and also because of the lack of data points which are verifiable and validated, right? Historically, let's say a bank wants to discount an invoice. Now, the bank is not sure where the invoice is already financed by another bank, or the invoice is typically an incomplete invoice with limited data points. So all that manual processes which needs to be followed to complete a end-to-end creditation process increases the cost of acquisition and the cost of servicing. So banks historically have not been focusing. They have tried all ways of coming up with innovative solutions, but this constraint of lack of validated data has always been hindering this SME lending in this market across MENA.
Right. So now, where does supply chain finance come in, and why is it different from a regular loan?
Okay. So the whole supply chain financing, in terms of I can cover on both sides. Typically, it's a partnership lending model. A lender and a large anchor corporate comes together. Either you lend to these SMEs who are buying from a large corporate or selling to a large corporate. It can be on both sides. It's a partnership lending model. It's a collaborative model. Unlike a bank going to the SME and going and lending directly, which comes with that.
Right. So now, walk us through how UB actually makes this happen.
So in terms of UB, as our supply chain finance platform enables funding to SMEs at a very massive, large scale, both on sell side and the buy side. Right. So typically, let's say, in fact, I can give an example. There is a very large anchor corporate who has almost around 12,000 small SMEs who are buying from them regularly. Now we have built a program for funding those SMEs and bring multiple lenders with various risk appetite to lend to various tiers of small SMEs. It could be the whole 12,000 SME population can be split into 3 different tiers, and we bring multiple lenders to fund each of them. And the whole tech stack and the distribution and support and the lender partnership is brought by UB as a whole. Now, given all the invoices are coming on the platform, which are standardized and data points are verified, the decisioning can be instant.
So what is the bigger picture if this scales?
Broadly, if you see, the whole lending landscape in UAE will shift from a trust-based credit model towards a data-backed transactional model. Historically, lenders look at SME on a standalone basis. They don't have a verifiable transaction data. They have been relying on the individual creditworthiness of SME with limited data availability, and they typically ask for collateral. That will change, and going forward, the SME lending penetration will improve with the data-backed transactional model.
Okay, so I think closing even a part of this gap is transformational, I think, and for anchors, I think it strengthens supply chains and customer loyalty, and for lenders, I think it's lower risk deployment and lower cost acquisition and servicing, and for SMEs, it's actual survival and growth. So I think you've summed it up very well, and UB, I think, is playing a very transformational role in all of this, I think. So and also I think you've summed up the fact that we don't need to make SMEs look like big companies to fund them. We just need to connect them to big companies they already work with, and I think that's what UB does, right?
It's a collaborative model
Right,
where
right.
lenders, the large anchor corporates, and SMEs come together to scale the lending volumes.
Right, right. Audience questions for Mr. Shivakumar and Louise, I will take them up after the next fireside chat. So we have questions coming in. I will take them up once this is done. So, Mr. Shivakumar, thank you so much for those insights and for those very valuable information about how supply chain and lending works, and how UB is instrumental in a big way in making the transformation happen. Thank you very much for joining us.
Thank you.
Our next fireside chat is with two very important or very interesting guests is Mehul Bazaria, Director Innovations at Axeli, and Akshat Joshi, CEO Rapid and BTP Practice Director. Mehul and Akshat, are you here? Can you hear me?
Yes. Am I audible?
Yes, you are. You are very much. And you are going to tell us about finance functions evolving to meet new regulatory requirements, and how technology continues to play a central role in enabling compliance, efficiency, business transformation, and also UAE invoicing readiness with SAP DRC, and what SAP customers need to know. So welcome, gentlemen, to this very interesting fireside chat.
Thank you.
So Mehul, tell us about Axeli and what you help businesses do.
Right. Okay. I'm not able to start my video at the moment, so you can put this slider there. Hello, am I audible?
Yeah, you're audible, but your video is not seen.
That's what I'm not able to
Okay.
open the cam here. I don't know. It's not working. But anyways, we as an Axeli, we are certified SAP Gold partner. So we work with multiple geographies. So we work with enterprises across UAE, Saudi Arabia, UK, US, and we are like a SAP boutique. So we do in and out of SAP shop, SAP implementation, rollout, and everything. And also with the e-invoicing mandate in multiple countries, we are also delivering e-invoicing solution, which is SAP proprietary DRC solution or accelerated solutions to our customer.
Right. And Akshat, you lead the non-SAP side of this, right? So tell us more about this.
No, sure. I think that, yeah, e-invoice is common, and I think that the obligations to FTA is there for everyone, whether they are on SAP or any other ERP or accounting practices. So I take care of two things. Of course, in SAP, any custom module which is required on BTP ecosystem. And second is that all other ERPs other than SAP, that can be like Oracle, Dynamic, Zoho, Odoo, or any other legacy or custom developed ERP as well. So we help them to make the compliance required with bridging between those ERPs and ASP. So our role is largely into that. I take care of that practice. Thank you.
Right, right. So now, what's the most common misconception you hear from CFOs about e-invoicing? I think, Mehul, would you be able to take that up?
I mean, I will talk largely on SAP part. So currently, SAP customers, like I'm doing regular demos. And
Right.
what I'm finding is people are thinking, or companies are thinking, IT managers are thinking that their system is not ready. They don't have the data, or or do they have to make any customizations on their existing SAP to meet the requirement?
Right.
Now, all this last 1 hour from the expert, we have heard this word that it should be machine readable, it should be standardized. Now, this machine readable, standardized has a format. Now, that format is either XML or JSON or whatever government adopts. Now, UAE has adopted pinned AE XML format, and that format demands data. That data is supply data, buyer data, these are national addresses, tax data, line item data, discount data, any additional charges data. So this data is already there in the SAP system. But companies are still thinking that do they need any extra customization, extra effort, or anything as a substitute to get this data. So this I want to clarify that with DRC solution. So DRC is SAP's own proprietary product, and once DRC is deployed, they have all the customizations readily available. So the data is already there. And
Right.
one more thing, this is about data. Now, secondly, people ask us or companies ask us in the meeting that suppose I am issuing an invoice and the other party is not compliant yet. So for whom I am issuing invoice is in UAE, but it's not in PayPal network yet. Maybe he is not mandated for PayPal network. Then
Right.
how will my invoice pass through? Now the
Hmm.
answer to this is very simple. So the PayPal network has a PayPal ID. Customers
Right.
are going to go to Imara portal and generate the PayPal ID. Now ASPs are going to search through that PayPal ID, and if the PayPal ID is not found, then automatically it is going to directly FTA because reporting is must.
Right. Akshat, do you want to add to that? Ramsha?
No, definitely. Yeah. So yeah, another part is that see, largely we understand that customer having that compliance and signed with ASP, or maybe they are having their ERP or accounting system having this e-invoice module. But the thing is that it is not a direct switching of ERP module to comply this e-invoicing framework. See, it requires a kind of an abstraction. So one-time signing or one-time getting that compliance doesn't make that you are always there for the required invoicing thing. FTA may tomorrow change certain signatures, FTA tomorrow change certain compliance, certain fields additions. So in that case, it is something like that. You need to have a kind of a bridge between your existing ERPs and whatever accounting and invoicing practices you are having, and along with the ASP. So misconception of something like I can say that, okay, I have tied up with ASP, I have signed with ASP, and then my all compliance and for all the scenarios will be done. But this misconception may lead that, okay, the regular maintenance, regular changes, regular compliance adherence which are going to come, they may not be taken care by like that. Another big thing which we are experiencing and where we really adding a value is that nowadays, like you must have seen that even it's a large customers or an SMEs, they all not having, they having a multiple business unit within the one group, and not necessarily that all those business unit having a single umbrella of ERP. They may have a different ERP depending upon the group, depending upon the timeline of the ERP deployment. Now, when you want to go with all these ERP separately with this ASP, then it's a big, kind of a overheads or a maintenance practices which you require. So this is something like that. If I summarize, the misconception is that I have signed ASP, I am done, or I am having an ERP which is having a module of e-invoice, I am done. So this is the biggest misconception which I feel when it comes to a non-SAP environments.
Right. Now let's go back a little, and Mehul, if you could answer this about e-invoicing. What is the FTA actually asking businesses to do, and why does all of that matter now?
Okay. So FTA is asking to report all the invoices to the government.
Right.
Now, this reporting is in a structured format which government has asked. So there are odd 50 plus fields. Now, this field can be national address, tax information, export information, discount information, or anything related to that invoice. This
Right.
has to be reported. So what government is asking is to report in a structured format and choose your ASP. So the ASP choosing is mandate, because as per UAE, without ASP, there is no e-invoicing. You cannot directly hit the government. You have to have your ASP nominated before October.
Right. Now, that sounds like a meaningful shift from how invoices work today. So what do you think are the consequences for businesses that are not ready for it?
If they do not report, then the VAT reclaim is at risk. So there are penalties as well. So it's a government mandate. So if you do not comply, then you might get first warning, second warning, and then there will be penalties. Your VAT reclaim will be at risk. So consequences are obviously there. So mandate is the must.
Right, right. And do you think that there are any industries that face a more complex compliance path than the others?
For everyone, they have to follow the same document. Now people use different ERP. So some uses SAP, some uses Oracle, some uses Dynamics, some uses Infor. Now compliance is similar for everyone. Everyone has to report the same field. Now customers only have to look whether those fields, those informations are extracted from the current ERP or not. And if not, then whether ASP is helping to fill the gap.
Right.
For the invoices to be reported.
Right, right. Akshat, so I'll take on from there. So what's the FTA's enforcement posture going to look like in the early phase?
No, so as Mehul said, I just add on to that thing. Yeah, FTA at this moment they are having a kind of a compliance to be added, that in terms of JSON, in terms of the fields required, that in terms of the mandatory fields, the nature of business, the domestic business and differently treated, international different way of reporting the things, and of course when it comes to five corner, the important thing is that not only adhering or the adopting the compliance or the format which is required, but at the same time how swiftly you are reporting to the counter ASPs, maybe of your vendor, of your customer, how well your invoice is getting pushed when you are getting it from your vendor. So yeah, these are the important aspects which is required to be taken care by the FTA mandates.
Right. Now, one thing we always hear is how compliance keeps changing. So how does SAP handle regulatory updates without businesses having to constantly re-implement? Mehul, do you want to take this?
Yes. So DRC is SAP proprietary product, and SAP is itself a registered ASP.
Right.
Now, any legal change which is coming from the TTD document or FTA itself, now an entire SAP team is working on this. So there is a separate team which works with legal changes, legal authorities, and SAP makes that changes and ships the update.
Right.
So every customer gets that corrections to be implemented at once. So SAP just corrects and ships the update. So this is how they are always on check that whether there is any changes happening. So it's an easy shift when we talk about SAP DRC.
Right. But, before we move on, see, the room isn't all SAP, right? So how do you set up the handoff for the other half of the audience?
Mr. Akshat will take over because he takes care of the non-SAP competencies and
Right.
yes.
No,
Right.
definitely.
Yeah, take us into the non-SAP world then.
Correct. So yeah, of course, there is a big amount of, or you can say, big portion of non-SAP world which is taking care of the entire, business practices and
Right.
all the, names like Oracle, Dynamic 365, Infor, Zoho, Tally, and a lot of legacy ERPs and accounting systems as well. And that's where we add value, as if I repeat myself. So like it is something like that. There is not a plugin or a switch on that let me have my invoicing module compliant with the e-invoice. There can be a different versions, different implementation, different customizations being done in all these setups. Now, at the same time, the obligations remains the same, which is FTA if you are falling under those compliance umbrella. So where value addition required is that abstraction, which is I can say. So that we add a value by providing an abstraction which can seamlessly integrate with all these ERPs. On the right hand side, you are having the same APIs which you require to send to your FTA or the counter ASPs. But yeah, in the left hand side, you are having a different versions of ERPs. So how well we are ensuring that even though there are different versions, different way of the values coming from each fields, how we can unify them and ensuring that unified values are very well complied. So there should be no headache of version changes either on an FTA side, version changes or either on the ERP side, any customizations being done on ERP, any changes done into the deployment practices of ERP. So abstracting all those things and making a common plugin which can integrate with multiple ERPs, giving a unified way to communicate with ASPs, and then ASP can further take it forward to the FTA or the counter ASPs. That is the one thing. Second thing is that, as I said, when you are having a common a group, and within group you are having a different PayPal ID, but still at the same time you don't want to go into the various implementations or the managing a different portals for each setup of ERPs. Then this is a common practice where your all e-invoice practices will be done. You can give a different role-based access to your team. That can be accounting team, management team, or your partners. And then at the same time, every time it is not necessarily that it is API driven. It may not be seamless API driven. In a certain ways, you need to have a manual upload of the invoices, bulk upload of invoices. You may require a reconciliations of that. And nowadays, in today's world, we cannot ignore AI/ML. So if you want your you don't want to change your legacy ERPs to adopt the AI/ML practices for invoice, but this is the platform which we are providing, where we are coming up with a lot of AI/ML practices, where extracting the data from a digital document or from a common FTA drive, we extract all those invoices and do the required extraction for the fields and then submitting. Of course, a lot of error handling which can be taken care by that, and reporting and dashboard. So these are the all value addition things which we provide, which provides a layer sits between your non-SAP ERPs or accounting practices and ASP, and that takes care of a lot of e-invoices mandate which are going to come in future as well. So this is the kind of abstraction which we provide as a value addition in non-SAP world.
Right. So tell us something more about what Axeli has built actually for these businesses in particular.
No, very interesting. So we have built a plugin which we call is a rapid invoice platform, and very flexible. This is typically a SaaS-based platform, but yeah, very flexible in terms of it can be deployed if required in premises environment as well. Very configurable or customizable layer which talks with the ERP APIs, and of course whatever mandate requires from a before posting it to ASPs or further APIs, all those required check and balances can be done by this platform. Very easy web-based platform, role-based access can be given, helps to register the customers to get the PayPal ID, and all those required fields which should be there. So your dependency on ASP would be very light.
Right.
ASP would be more from a compliance point of view. All the roles which you are expecting from ASP would be there. You do them, and then what customizations or value addition which you required from this layer, which we provide.
Right. And Akshat, just to add to that, so what would be a message for any business in the room that's still in, let's say, wait and see mode?
Yeah, so I think that at times we see the calendar, and when the calendar number is 1 year after the year going on, we think that we have a lot of time, right? But practically, it is not that. So 2027 is not far away, and see, you may you get the ASP sign done, and then that compliance check is there, and then you may be comfortable or kind of relieved that we have done that thing. But there are a lot of other things required to be done as well, other than ASP signing, and that is something like your ERP integrations, your practices. If there are certain fields missing, an integration with the sandbox. Establishing the discipline of sending the invoices in a certain manner. So my message is that we should do that reverse engineering, and if we configure or if we consider the time accordingly, it's a real high time now to act on it. Not only that signing of ASPs, but establishing the entire practices for integration with ERP and end-to-end invoice sending as well as the receiving. So high time to act, that I can summarize in a one word.
Absolutely. And for SAP customers specifically, Mehul, the same urgency?
Absolutely same urgency, but we have a little difference here, and the difference is DRC module is available, it is ready, but then still it requires configuration, testing, ASP connectivity, different business scenarios, UAT, so that takes time. So for that, I think everyone should start. I mean, there are different business scenarios, so the early the good.
Right. Now, before I let you both go, what's the single thing you'd want every person in this audience to walk away with today? Mehul?
So I would say don't let the technology be the reason you are not compliant. So whether SAP, non-SAP, or any other ERP you are using, you start as early as possible. So at the end, companies will not be under pressure to deliver, and they can do effective testing of their solutions.
Right. And Akshat?
Yeah, I'll say that, okay, of course, this is a compliance. There are a lot of penalties and a lot of rules and regulations which require to be done. But you can rely on partner like us, where you can focus onto your business, your operations, and this is going to make it the business more simpler and easier with this right digitalization practices, and a lot of transparency will be there. So maybe, yeah, for a 6 month, 1 year, there would be a disruption in the way you are doing the practices, but in a longer run, this is going to give you a lot of comfort, a lot of help, and a lot of benefits of digitalization. And choosing the right partner can ensure you that the way your other digitalization practices, with help of right ERPs, right network setups, and right other tools and technology, this is also going to be very simpler.
Right. That was, thank you, gentlemen. Now we'll just take up a few questions for our fireside chat guests. Louise, the first question is for you. Louise, can you hear me? Is Louise there online? Nah. Okay. Is Mr. Sivakumar there? Can you hear me? I don't think he is there online, but I don't think he can hear me. Mr. Sivakumar, can you hear me? Okay, so for Axeli, there's a feedback that it's amazing to learn that SAP is also is also an ASP, and thanks to the gentleman, how straightforward and easily SAP's role is provided. So that was a feedback from Anthony S. And Is Mr. Shivakumar there or Louise there? Because there are questions that have come in for them. Louise, can you hear me? I don't think he can hear me. All right. So, okay, I think then that concludes the fireside chat sessions and some very interesting conversations that we've had today on, both in the panel and in the keynote and in the fireside sessions on e-invoicing and compliance. Thank you all for sharing your expertise and perspectives. Now we've come to a very interesting and engaging part of the program today, which is an interactive poll, which gives you a very good opportunity to test your knowledge of UAE corporate tax, e-invoicing, and digital compliance. 5 lucky winners will win exciting prizes. So get ready to participate. Remember that speed and accuracy both count. So can we run the quiz, please? All right. So what is the primary objective of e-invoicing? Increase paper usage, automate and standardize invoice exchange, replace accounting systems, eliminate audits. Then the second question, which UAE tax was introduced in 2023? Was it income tax, wealth tax, corporate tax, or capital gains tax? The third one is, what is the standard UAE corporate tax rate for most businesses above the taxable income threshold? Is it 5%? Is it 9%? Is it 12%? Or is it 15%? The next question is, which of the following is a key benefit of e-invoicing? More manual data entry, slower payment processing, reduced errors and fraud, higher paper storage costs. Your next question is, which technology is most commonly associated with secure digital payments and fintech innovation? Fax machines, blockchain, typewriters, CDs. And why are governments around the world adopting e-invoicing frameworks? To increase paperwork, to improve tax transparency, to eliminate accounting departments, or to reduce internet usage? And which UAE authority administers corporate tax? UAE Central Bank, Ministry of Economy, Federal Tax Authority, Securities and Commodities Authority. Which is one of the biggest advantages of fintech for customers? Slower transactions, limited access to services, faster and more convenient financial services, more paperwork. And what is the main purpose of corporate tax? To tax personal salaries, to tax business profits, to tax exports only. And finally, in a continuous transaction control e-invoicing model, when is an e-invoice or when is an invoice typically considered legally valid for tax purposes? When it is generated in the seller's ERP system, when it is sent to the buyer, when it is archived in compliance with local regulations, or when it has been validated, cleared by the tax authority or its authorized platform. I think these are very interesting questions. And come back, no? I think these questions are simple. I think all of you being tax invoicing experts, you can answer all these questions. Remember that 5 winners will win very exciting prizes. All right. So winners, we will announce your names and we will send you the prizes shortly. We will get in touch with you. So as we conclude today's webinar, I would like to thank all our speakers, panelists, fireside chat guests, partners, and attendees for contributing to a highly informative and engaging discussion. Once again, I'd like to thank our sponsors, Smart Innovation Partner Billit, Innovation sponsors Axeli Ecosio, panel sponsors UB, SW Tenet. Today's conversations have reinforced a critical message. Digital tax compliance is no longer simply a regulatory requirement, it is a strategic business priority. We wish you continued success and look forward to welcoming you to our future events. Have a wonderful day. Thank you.
Thank you.
Thank you.
Thank you very much.
Thank you.
Thank you. Bye.